Listen. I got some things to say. Listen. It just told me I'm live. Content. It's 8:38. Live. On. Morning, Victor. I should. Morning, W. Good morning, Chris. Okay. Let's just refresh this so that I'm sure it's. Daddy's got to make his $10 here. Market data. This is such a good page by Seeking Alpha, by the way. What works. Voila. Wop. I mean, look at the bloodbath yesterday. The sectors. If you were in energy. Oh, I guess this is pre-market. I don't know. Say, is that up point? No, that's down. Did that end the day at up 0.01? That's crazy if that did. 1 month, if you're in anything but technology, you're happy. Technology, you're not happy, but the year to date, I mean, just look at the year to date. That's where you got to look at. Full disclosure, my brother works for Microsoft, and my parents are telling me he's on a bender. It's not Microsoft. And if, by the way, just CrowdStrike's under 300. Buy a couple. Yeah. In fact, I am going to do that myself right now. I'm going to buy a little bit in Weeble. I put it on the... Oh. No, ma'am. Watch list. Let's look. CrowdStrike. I own some. I think I'm going to buy it. It's $2.99. Let's see. So here's the 5-minute algorithm. I would put, you know what, Maya? Wait until the market opens. I have a feeling this one's going to go crazy. Yeah.
It did already.
Well, that candle, that's the 8 o'clock candle. There's always data issues with the 8 o'clock candle.
Oh, people need to know that.
Yeah. There's just so you guys know, the 8 a.m. candle, when the market, so pre-market is always kind of, hey, we're going to match buyers and sellers. There's always an issue with the 8 o'clock candle, and it's on pretty much every platform I've ever been on. So ignore the 8 a.m. candle that makes it go nuts like that. Let's see. There we go. And I still didn't get a freaking ad. Okay, let's see. We're going to do live chat. So on the 5-minute here, it doesn't have confirmation. That's why I'm saying let's wait. I think anything under 300, to be honest with you, is a good price. Looks like the blue line, about 295. That's the 50 period trading. But that MACD kind of does worry me in the RSI. It's hanging out at no man's land at 47. It's not crazy. 282 was the way to buy it. I'm not trying to pick pennies, but I don't want to buy something at 840 to see the market just trash this thing and to go down to 250. Morning, Laurel. But I've got a good amount of data to go over. We're going to do some scans here. Let's go to the market scanner. And we'll go to the main one that you do get with TrendSpider. By the way, if you are tuning in live here, just know TrendSpider's sale ends in 4 hours. So the sale ends in 4 hours. Take advantage of it. 6 months for free, up to 50% off. Use the link in Linktree. So go over here, linktr.ee. It's this top link. And again, TrendSpider is, it's up to 50% off. The 3 tiers. So the standard tier, you just get 6 months off. It's 50% off. So you get 6 months for free. The enhanced, you get for $58. It's $5 a month difference. I would tell you that the enhanced is far better at this price than the standard because of the active windows, because of the simultaneous alerts, because of the lifetime of the alerts, because of the trading bots that you get. All of that stuff, plus variance testing, you get power user tools. I mean, there's a couple of things that you do get in this. Real-time futures data that you do get in enhanced that you don't get in standard. I think that's my first thing. As long as this one's marked down that much in price, I would go with that one. Now, if you're brand new to actually trading, this one might make sense to you. It's $111 a month. Again, make sure you have a good amount of money in your portfolio. Do not buy this if you're trading with $5,000. It doesn't make sense. Use a free charting software. But this takes the training wheels off. This is just a much better platform to trade on. But I did want to put that out there because it's 4 hours. Again, it only lasts for another 4 hours. What do you do? You sign up for TrendSpider, then you email me here on the Linktree. The email is right up here. And just email me, and I will get you on our program on TrendSpider so that you get all of the updates that I do on the watch list and the scanners. And then, you can kind of have at it. I'll email you back a way to import the 4-hour algorithm, the 5-minute algorithm, all of the algorithms that I use, the watch lists, everything. And again, this is the 5-minute algorithm that we have here. If you just go over to Strategy Tester, and where did it get you in? And again, I've talked about this on 5-minute. I like the entry. I don't like the exit, but I like the entry. Ironically, it just got you out with what's that? That was at 5:50 this morning. So say 6 a.m., 2 hours. You made 5.77%. Probably could have done better with some options, but I don't do options. But again, that's the power of TrendSpider. Morning, Steph. And I wanted to put that out there because the sale ends in 4 hours. Not that I haven't been pumping it, but if you're sitting on the sidelines, I'd kind of make sure that you get in there. I do have CrowdStrike in my holdings. Do I have that listed in my holdings? I do. It's on our watch list. It's on everything. So it doesn't have a cross up in the 4 hour. We can look at it in the 4 hour. No, we don't want the extended time. Yeah, it just covered this gap in the 4 hour. The 200-day is sitting at 335. It's under its 200-day. I mean, come on. Let's look at this. The 4-hour algorithm, it's so good. I mean, it's so good. This is the benefit of the 4-hour algorithm because if you were trading CrowdStrike, again, you're going to set up your alerts to have it. It got you out here with a 9% gain, 9.1%. That's fantastic. And so you're enjoying this slide that you're seeing because you got out during this slide and you can get back in. There's a gap down here at 306 this gap. Any reaction in the market is an overreaction. This is going to be a fantastic buying opportunity for this stock. It is not going to be, oh my God, I can make 50, 30, whatever percentage in the next 5 days. This is like Amazon. You may experience further downside on this. But in my mind, I think this is a buy the dip opportunity. I think Eli Lilly is a buy the dip opportunity. I think Patty or somebody mentioned in the Facebook group yesterday about what's the news on Lilly. Nothing. There's no news. It's just pull back. That pullback, algorithm got you out with a 15% gain yesterday, but that was pretty clear up here that you had lost confirmation. So selling over 900, buying under 900, selling over 900. I think it's fine. There is no news on this. This is going to kill it on earnings. They're going to guide higher. You're going to see at 850. I bet it moves back up to 900 after the earnings. So. Morning, Daniel. Let's get back to scans. The daily stock pick scanner. We've got brokerage holdings. There's nothing in my brokerage holdings. Let's see Bitcoin. I do have an alert on MicroStrategy. Did it get me out of MicroStrategy? No. You're still in. It's at 1553. I need to add more. Nothing in Bitcoin. Let's look at covered call ETFs. These are income ETFs. Nope. Let's look at energy names. Boyle. That's down 1.73%. It's had a nice little, pop here in a couple of days. Leveraged ETFs. I don't think there's anything in this. Hibbs. Let's see. Hibbs. SARK. Leveraged. Low cost Vanguard. Nope. I didn't think there would be anything. Let's see the spider sectors. Let me answer that once. I can't think of two things at once. Wow, there's nothing on the watch list? Something's up. Something's up here. I'm going to go down the core portfolio just to see. There's nothing? I wonder if... Wow, nothing. Okay. Let us scan... I'm going to scan something huge. Let's see. Let's do under market cap 10 billion to 20 billion. I mean, Boyle crossed up, so this is Western Midstream Partners. Let's see. Let's scan all U.S. ETFs. Since Steph has an ETF question. So you can scan entries in the the algorithm to see what got you in the last candle. I don't know any of these ETFs. Let's see, JDST. What's this one? This one's Junior Gold Miners. This is up 5% in pre-market. Maze. MYC, listed funds, true shares. What was that? AWEG, agriculture. Nothing that I want to do. Yes. So I guess there's nothing. There's not much. Dell, I'll explain the ETF stuff my thoughts on ETF. Dell is just, algorithm got you out on Dell here on the 4 hour. It's just weak. Everything's weak. I'm adding. I haven't added yet. There's no reason to add right now. So I haven't sold. But my average cost on this one is like, what, 110? 105, somewhere in that neighborhood. What's your take in holding and dollar cost averaging leveraged ETFs over a longer period? I think if they're bullish, like TQQQ, and here's the problem that you have, and we'll look at a longer term of TQQQ. The problem that you have, and I think Humphrey Yang, let's see, YouTube Humphrey Yang, he put out a great one. He's a financial advisor, and he put out a great video, and I don't know popular videos. Let's see, it should be one of the popular ones. Why net explodes? Yeah, it's one of his videos, and he goes over the actual math behind the 5 biggest mistakes, and one of them, let's see, Humphrey Yang 5 biggest mistakes. I think it's going to be 5 Roth, a beginner. After 10 years experience, the 5 investments will keep you poor. Stop doing this. This is it. And I'm going to share this. So what he goes over is that downturn that you see, Steph, the downturn that you see on the chart. I'm just going to include that, but you can Google it and watch it. The downturn that you see here in 2021 to 2022, it's not just wiping out everything that you had down here. I don't think something bullish is bad to, again, if it shows a long-term trend up, and you can look at a monthly here, again, it's showing a long-term trend up. You're about to double top at about 86 on this one. I would rather own, remember a leveraged ETF. A leveraged ETF, wow, we're looking at an airport that's just dead standstill. A leveraged ETF doesn't own the actual underlying stocks. It just owns options. I don't like owning options because they expire. So I don't know that it makes sense, but would I argue that, hey, if you own TQQQ at 71 cents back in, 2011, and you got up here, 10 years, 12,000%. I can't argue with the math on this, but does it make sense if, the U.S. actually has a downturn? Because that again, if you own QQQ, you're not making as much, but you lost 78% on this one. 78%. Okay? And remember, I think I posted a couple of days ago, once you get past 50%, it takes 100% to actually of gain to actually make that money back. So your gain right here is 291%. So it's been good. I can't argue with it, but the math makes sense. I just think the underlying logic doesn't make sense. Like Chris says, it owns options. So that would be where I would be a little bit nervous. But again, risk all comes into it. If you're okay with it, I don't know that I dollar cost average into it. Maybe, let's see, if you put $1,000 in here, what's $1,000 times 12,171%?
It's $121,710.
If you want to wait 10 years for $1,000 to turn into $121,000, that's not bad. So I can't argue with it, but I would argue that there's probably better places for your money. But if you want to put a YOLO bet and $1,000 isn't going to hurt you, have at it. Could go down to 500, but it could be 121,000 over, 10 years. So again, you don't know how well these things hold up over time. This one just seems to be holding up pretty damn well. So there are my thoughts on that one. Dell is just, Dell's Dell. That's going to be fine. Morning, Omar. Morning, Scott. I think Dell will be fine. I think you'll see it get hurt a little bit today because it's PCs. Again, I'm on a Mac. I point out Macs aren't affected. They are because they're connected to the internet, and the entire internet is affected. But, wow, American Express down. Let's see. Yeah, here's the thing, Steph. You have to realize that if you're here almost every day. I know that. If you're looking to trade every day and you're looking at your portfolio, you could sustain a large percentage loss in that amount. Now, 3 to 6 months, we don't know what's going to happen. I got told, by the way, that I talk down about Trump too much. I think I talk evenly about both candidates, which are horrible, and I'm 71% of Americans that think that we could have a better candidate on one side or the other, or both. But 3 to 6 months, you don't know what's going to happen. We're in an election season. I got an article that comes up that says, hey, if you're trading chips, get ready. Morning, Alan. We are going to, we're going to go home. I'm going to go off of that one. I don't think there's anything new on that. We got Kava. We got Flutter. We've got, I want to point this out. That's going to change. I don't care if it's going to change. AXP beat. Intuitive Surgical. Shocking how good that company's really doing. I wouldn't have expected this. A 10% pop yesterday. Or I'm sorry, 5%. Intuitive Circle up 7%. It's up 5% in pre-market. Netflix earnings killed it. Netflix killed it. Grew everything. They were down 5%. They had their call. They're now up 1%. This was a GMed, which was a pandemic crazy stock. Motley Fool just said buy it again. And so I put a chart in there. This is why I hold Broadcom, because shit like this could happen. SOFI is catching a bid. Insiders buy, and it could be an indicator. This is a great, great graphic by somebody I was on Spaces with yesterday. Spear. And that just great graphic. Amazon Prime Day. I'm going to close this down. We're going to open this up. This is an analysis. Which one's better, Abercrombie or Amazon? Steve makes the play there. Amazon Prime Day set a record. I still say this is a fantastic buy. Eli Lilly. This is what happened with Eli Lilly. Chips may be a crazy through the election cycle. CrowdStrike outage from Webbush. I think you buy it when it dips under 300. I think you're fine. Here's the thing. As long as somebody tunes into me, if you're a person who's going to get offended by my political views, then in my mind, I don't think you're American, because that's what America is great for, is you can talk about political views and people, you can debate them. We all have different views of the world. We all have different, rights and wrongs. The reality of the situation is that's what makes this country great. And you can't tell me, and one of the reasons I bash Trump is because just because I voted Democrat, he would consider me an enemy of the people. If that's you, don't listen to me. Honestly, don't listen to me. I have voted Democrat. I've voted Republican. I've voted both. In fact, this election, I very likely will just vote the incumbent out because I want term limits, and I don't think that they should be in there for that long. So, if that bothers you, there's nothing I can do. Nothing. This whole podcast is my thoughts on stocks. Politics plays a portion of stocks. If you're going to get upset about political views, nothing I can do. I mean, it's gonna trickle in. I try and not make it the focus of the podcast, and I think that's the right thing, is just don't make it the focus of the podcast. But if you get triggered by my anti-Trump stuff, and you're rooting for my anti-Biden stuff, and you still listen, hey, kudos. If you get triggered and you don't want to listen, that's your choice. I'm okay with it. I don't need to have friends who have the same view of the world on this. For me, I don't care. I have friends who are Trumpers. I have friends who are, can't stand the guy. Rather than, say I can't stand the guy, I listen to the people. Why do you like him? And then I kind of digest it, and I'm like, I still don't like him. And then I ask, my people, why do you like Biden? And then I say, I just don't like him. So it is what it is. VRT, Meta, and Google, especially with earnings approaching. VRT, I own. Meta, I own. Google, I own. So Kyle, I'd say long-term, buy it. Short-term, I think we're seeing some weakness. VRT is one. I've got a trigger, an alert to set up to buy. I think this was the clear buy window, and we've broken down from it. So we're seeing some weakness. Google, same thing. We had a great buy window between here. We're seeing some weakness. Algorithm has you out. Meta, same thing. I mean, under $500 for Meta, I think you kill it. But algorithm has you out. We're seeing some weakness. So there is the look at three stocks for you, Kyle. I mean, thanks, AJ. Yeah, honestly, this person put it great, by the way. He said, I love your podcast. I listen every day. And this is what it is. He goes, I just wish you wouldn't, passive aggressively talk about Trump. I think I've said it before. There's some family history there that Trump is just not a good person. I will leave it at that because it was a private issue that I don't care to discuss, but he's just not a good person. And yes, like they talk about, people my age talk about the 6 Degrees of Bacon. And if you don't know that game, it's a fantastic game. You mention one person in Hollywood, and within 6 people, you have to link them up to Kevin Bacon. I have a one-person link to Donald Trump, and it was not a good situation. So there was a suicide involved. There's a lot involved, and he's just not a good person. Now, I don't wish that, I'm super happy that he turned his freaking head and he wasn't assassinated, because nobody deserves that. I don't care what political speech you're on. Nobody deserves that one. But, when he turned around to Joe Biden during the debate and he said, I don't know what he just said, and I don't think he knows what he said. I thought that was brilliant because it's true. I mean, that was the greatest freaking comedy line anybody could write. And I think I just lost a bunch of listeners, by the way, because I think a lot of people left. But oh well. Yeah, Chris, you pay $1,000 for your energy bill. You should be voting Democrat so that they give you some solar power. But okay, let's get to the cues. And let's see. Kyle, I don't mean to kind of gloss over. It's just we've got weakness and earnings. I mean, Netflix and everybody from earnings, American Express, you better kill it on earnings or else you're going to get beaten. And so, short term, I think it's going to determine, the day before what those stocks are selling at, what the price action rules everything. And so, yeah, one thing I won't tolerate in any of these like podcast groups or anything like that is hate spewed to anybody. So I know politically it can get you charged. It doesn't necessarily get me charged. Everybody has the right to their opinion. So that's the way I view it. But this listener did put it in a very, very kind way. So I'm not bashing the listener. I'm just saying, hey, if you don't like it, you have your choice. I just appreciate when you guys listen. So, okay, let's see. I got to talk about next week. Yeah. I wish I had a giant pool. Let's talk about this stuff. Scott, support levels. I mean, all you've got to do, the problem is we've broken down from some support, but you got to look at long term. Now I don't argue that in 2022, I lost a bunch of money just because I didn't get out and I kept seeing support and it kept breaking through support. So I'm not making major changes. I'm not trimming. I'm not doing anything during the current time because I do think, long term, I think we end the year higher than we are today. So, Jim Cramer's interviewing the CrowdStrike CEO from a hotel room, it looks like. Okay, hold on. I'll be right back. I just heard a boomer moment for Jim Cramer on he said the blue circle of death. It's not, it's the blue screen of death, dude. Palo Alto's up 2%. Let's see. Lily's up 2%. We've got Apple up a little bit. We got Google up a little bit. That won't hold. Oops. Okay. Let me hit record. Good morning. It is Friday, July 19th. If you are in an airport, if you are in a bank, if you're in a casino, most likely you're dealing with issues that I'm not dealing with here at home. I'm on Apple. Major outage. We'll go over the outage. We'll go over the play on that one. We'll go over some of the chip stocks that, hey, expect volatility. Eli Lilly, big pullback. What are we doing with that one? Amazon Prime Day set a record. There's an article that I want to go over that Steve Kress, who's in charge of the Seeking Alpha Quant, he says Abercrombie and Finch might be a better deal than Amazon. SOFI, we'll go over that one. Broadcom, GMed, Netflix, earnings, Interactive Surgical, American Express. Next week's huge for earnings. We'll go over that, and then we'll go over some social stuff. Just an announcement. Next week, I am at the University of North Carolina, Monday through Wednesday, working at a European soccer match. So I most likely will be able to do the podcast from the hotel room. There definitely will be a newsletter. So if you're not subscribed, make sure you subscribe to the newsletter. The newsletter is free during the week. I had to explain this last night to somebody, but it is free during the week. It is paid on the weekend. And I'm going to start some new stuff like a monthly update Zoom meeting with all the paid members. I got a bunch of paid members, and I don't think I've been doing enough for you guys, so I'm going to do a little bit more. So if you're interested, pay. And support me. If you're not, just enjoy the free one. I'm not changing the free one. I still love what I do. I still love helping everybody. I still love everybody helping to learn the system that I have that's allowed me to grow my wealth. So we talked about having 5 names on a list that if they dipped 5%, you would buy it. Well, with the Qs, we're at that. We're at the 5% dip from the high. So if the Qs was in your list, and this is the best advice I can give you, make a list of 5 names. If it's 10 names, who cares? But make a list of your top 5 names that you want to own. If they dip 5%, go ahead and start buying. The Qs is one. It's in mine. I'm not going to buy until I see the algorithm give me a buy indication. That's the way I play it. But it has dipped. It is on my watch list. It is something that I will add to when it gives me some type of strength. Now, you may say, well, what am I looking for? Me personally, I'm looking for confirmation. If you don't know what confirmation is, again, it's in the newsletter in this education center section right there. But that green line, the 9-day, I want to see it confirm for me that this is a good buy. I don't want to buy into weakness. I want to buy into strength. Like here at 407, I was buying. Yes. Did I get out when it dipped down here? No, it lost confirmation, but it regained it. And again, the algorithm provides me this stuff. Now, here, I would have argued this candle here in February lost confirmation. If I was trading this one, I might have gotten out before that 3%, but it continued up. You can see right here, the algorithm got you in at 448. Did I want to buy? I saw it trading sideways. Didn't add to it. It got you out with a 2% loss. I saved myself that 2% loss. Did I buy at 441? No, I didn't have confirmation. Down here, you get to the 200-day. You gain confirmation. You can't time it perfectly. You will not win 100% of the time. But between all of the things that I talk about, between buying into confirmation, between finding the trend, between the 4-hour algorithm, between the MACD, between the RSI, between the volume profiles, between the gaps, between the Bollinger Bands, all of that stuff, it's in the education section of that newsletter. And it is all there for you to learn about. These are the things that I see. Don't follow a douche on the internet. That's the number 1 rule of this podcast. Number 2 is don't follow Jim Cramer. But again, you've just got to do your own thing. Understand that, yes, the Qs pulled back 5%. Am I automatically adding to it? No. But it's on my watch list, and it's something that I'm looking at. This was crazy news, by the way. CrowdStrike. And it again, we're kind of in this, the middle of this. CrowdStrike CEO is getting interviewed right now on TV. He was on the Today Show. Now he's on CNBC. They're asking him, there's a ton of people, a ton of broadcast networks that are down. Flights had to be grounded. I saw a casino where the ATM machines and the blackjack machines are all out. I'm on Apple. So let's talk about how you want to trade this one. Well, I put out this tweet this morning. My 5-minute algorithm in TrendSpider has you in at CrowdStrike right as it pops back up from 287. Let's look at that 5-minute algorithm because, again, I don't like the exit on this one, but I do like the entry on this. And the entry is an A+ setup for an entry. And if you got it this morning, and we can take a look at this because I want to look at the after hours. If you got it this morning, that's the Qs. I wouldn't trade the Qs unless you're doing options on SPY or something. You can do that. But you want volatility on this. And this news story provides you a volatility. And I posted this chart. Again, it got you in at 282. It got you out at 5%. I would argue you lost confirmation up here at 305. You're trading at $300 now. Let's see. It is trading right now at $300. My guidance to you is if you can get this under $300, buy it. Will it go to 250? It might. When we open up at you might not want to trade this for the first half hour. But if CrowdStrike is on your list of 5 to own, just buy it under $300. Just buy it. I'm not saying that this is going to go to 350 when it opens. It very likely may go to 250 when it opens. It is an extremely expensive stock. We can go over here and look at the quant. It is down. It got down to about 250, I think, in the pre-market. That's the lowest that it's been. This is a situation where their actual service screwed up. So it's not a situation where there was a hack. They came out in front of it. They said, here's the problem. The problem is this is going to be an ongoing situation. The way this software works, and again, you can read in that article the way it works, but the article puts it perfectly. It's a cloud-based cybersecurity system. And so what happened was one of their engineers pushed out an update which actually caused Microsoft Windows to fail. And it causes the blue screen of death. So if you're using any of the Microsoft Cloud stuff, CrowdStrike actually caused that to fail. Now, you've got issues here with, okay, how did this happen? Why is this happening? Will this happen again? That's all questionable. That's why Palo Alto Networks is up. But I would argue CrowdStrike is your best bet. Now, in the quant, it's a hold because of the valuation. And this valuation is based on the closing price of $343. So right now, you're going to be able to buy this under $200, under $300. Now, the PEG ratio is 2.13 going forward. That is, it's not a great number. It's not a fantastic number. But, again, when the price comes down, that PEG ratio actually will go down as well. When you look at the growth, they are growing substantially. So I would argue that CrowdStrike is one of the best cybersecurity stocks that you can own. I own Palo Alto. I do own CrowdStrike. I will be adding CrowdStrike probably at 10 a.m. That's the way I'm playing it. If you don't have CrowdStrike and you want to add it, just add it under $300. I think long-term you'll be fine. Short-term, I can't tell you what the market's going to do because the market is going to figure out what price this should have. It's what a market is. It's just that. So I would argue that the 5-minute algorithm is a fantastic way to play that type of volatility. And it showed you made 5% in 30 minutes, 2 hours? Yeah, it was 5. You got in, let's see, at 6 a.m., 5:55, at about 282. You could have bought it earlier, but I would argue that you finally gained confirmation. It got you out here with a 5% gain at 8:45. So at 6 a.m., you got in, 8:45, you got out, 5%. That's a great play. Again, that's the 5-minute algorithm. And I would argue, if you're listening to this in the morning and I'm uploading this, TrendSpider is on sale for another 4 hours. Okay? If you don't miss this, I've said it all week. It's the Prime Day deal that they've got. If you can't get it, I think the standard will still be about $53 a month. But if you can get this enhanced for $58 a month, that's a deal and a half. Either way, you get 6 months for free, and it's about $600 a year. Make sure that you have enough money in your account that you're trading with to be able to support this. Because what do you get? You get my 4-hour algorithm. You get the 65-minute algorithm. You get that 5-minute algorithm. You get all the watch lists. You get everything. So make sure you've got enough. Now, CrowdStrike outage is a major black eye. Dan Ives came out and said it. It's going to be a couple of issues. There's going to be, hey, we've got to do PR. He's out there now doing PR. There's nothing. He's got egg on his face. He's got to live up to it. It's not a cyber hack. This is 100% their fault. So then you have, will their actual customers leave? And then will they actually sue them for downtime? There's potential for liability here. So CrowdStrike could have substantial losses. That's why I'm saying I think long-term, this is fine. But you've got major issues. Again, this is a risky one because it's so expensive. The other thing that's risky, chips. We've seen it. And this is an analysis. Chips may be volatile through the election, but fundamentals are intact. Again, I added NVIDIA, at what, 130? And it's now down at 120. Am I selling? No, but it's showing weakness. A lot of these stocks that we've been trading and we've been buying, they're showing weakness. NVIDIA, the algorithm got you out. Now, the algorithm makes you 508%. Buying and holding makes you 725% over the last 24 months. The fundamentals make sense, but you will have to go through. Let's look at a weekly of this one. You've gone through several downturns of 40%, 50%. Look at 2021 to 2022 during the chip glut. You went from $29, say $30 per share. It's $300 back then, all the way down to $10 per share. That's 60%. You go through this with chips. It's just volatility. But are you unhappy that you bought here at 30 when you're trading at 121? What, 3 years later, you've 4 times your money? You're going to go through volatility. That's what this article says. Now, the other one that's going through volatility is Eli Lilly and Novo Nordisk. There is no reason that they went down other than they've run up so much. The early stage trials of the oral weight loss drug by Roche, that kind of hit them in decline. But I would argue with Eli Lilly, it's part of the core portfolio. And when you look at the 4-hour algorithm, it got you out before this huge downturn. Well, it got you out in this downturn. You could have looked at this and said, you know what? I see that Eli Lilly's down. You could have said, hey, when it loses confirmation, give me an alert. It would have alerted you up here at $924. I've said this before. Buy this under $900. Do I want to buy right now? I would argue no. I would argue you wait for at least a couple of candles sideways, if not an uptrend. So you don't want to buy into weakness. I want to play in that middle ground. Now, the algorithm got you out with a great 15% gain. Are you happy? Well, maybe you're not happy because you could have sold up here at 940. I would argue if you could have sold there at 940, I think the stock's got it in it. Their earnings are coming out August 7th. I think these guys are fine. I think they're going to continue to raise their guidance. I think they'll continue to blow it away. Eli Lilly, it's in the core portfolio for a reason. I don't own it individually. I wish I did. Amazon, they set a price record for Prime Day. Set a new record. We can look at Amazon. This one's weak. Do you want to buy Amazon at 180? Remember, it had that double top at 188, and it's down at 180. I would argue this is a great long-term buy. I think it's a $250 stock. The RSI is down here at 30. Their earnings are coming up next week, I think, August 1st. So in a couple of weeks. I don't know exactly what they're going to say, but when we look at a long-term chart on this one, you're seeing a clear double top at that 188. We broke above it, but we're now below it. That one still hasn't necessarily turned into support. It's just not long enough for me to feel comfortable that it's support. But you had this golden cross right here. And you had the golden cross when it was trading at about 186 at the high. It opened up at 180 when you had the golden cross. I would argue that, again, when you look at this, do you have a volume shelf? No. You've got no volume shelf between 160 and 180. If this is one where you're waiting to add to it, I would start dollar cost averaging your way in. Say you want to put $1,000 into Amazon. Buy $100 today at 180. Do I think that, you could come down to that 160? You could. Just buy $100 on the way down. This is one that could potentially pop well over that 188 and go back to 250 on the earnings. They are that good. They have Netflix reported last night. They talked about the ad revenue tier being an absolute killer game changer. These guys just had a record-setting Prime Day. Take a look at this. Say you want, well, I'm not really an Amazon guy. Well, maybe you're a douchebag who wears too much perfume and you buy Abercrombie. Steve Kress here says Abercrombie is a better buy than Amazon. If you don't know Steve Kress, he's in charge of the quant system at Seeking Alpha. And the quant system, in my mind, it is the best way to evaluate the fundamentals of a company. And so if we go and we look at Abercrombie and Finch, let's look at Abercrombie and Finch. Abercrombie and Finch was and it still is, I think, alpha pick. And so we'll go over this. Go to my link tree. Say you want the quant. I'm going to show you how to use the quant. Click on this second one. Okay, the second one is Seeking Alpha, $25 off, and you get a free 7-day trial. So you can try this and just look at the stocks in your portfolio. See how they match up on the quant. You may want to sell them after you look at the quant. Okay, if you want things like Abercrombie and Finch before they start to break out, get alpha picks. It's one pick on the 1st and the 15th of each month. Look at the performance of the portfolio. It's up 122%, during which time the S&P was up 35%. This is how you use these tools. Again, TrendSpider's one tool. Seeking Alpha Premium is another. Alpha Picks is another. The tools are there. Charting program, fundamentals, and ideas. Those are the three key pillars of any system. And Abercrombie and Fitch, it's still a strong buy in the quant. Wall Street says hold it. Well, you've seen a nice little pullback here. Wall Street says the average price target is 190. That's 21% upside. So Steve is saying, hey, the valuation is still there. It's only got a C on a valuation perspective. Abercrombie and Fitch to join the S&P Midcap 400 Tuesday, July 16th. That was just this week. Did it get a pop? No. Your 52-week range, you're between $35 and $196. That's just within 1 year. 1 year, you're up 322%. So again, this came from Alpha Picks. And Steve in that article argues that Abercrombie and Fitch is a better buy than Amazon. Just based on fundamentals. This is a great article. Where can you find this article? You can find it in the newsletter. Sign up for the newsletter. It's free. I'll put it in there today. You'll get it around noon time. So this, I was on Spaces yesterday with Spear. It's an ETF. They are beating ARK, but they're not beating the S&P. So I was impressed with her explanation and her knowledge of the stocks that she owns. But this was a great graphic. This is the AI data center value chain. And you can see ARM, NVIDIA, Intel, Micron, Taiwan Semi, AMD, NVIDIA, Arista. That Arista is ANET, Marvel. Vistra for the power generation, Constellation Energy, power transmission, ABB, Schneider, Aspen Tech. You can see power switchgear, Vertiv, Schneider Electronics, Siemens, Hitachi. You can see thermal management, Emerson, Vertiv, which I own, Invent. You can see UPS and backup systems, CAT, Generac, Vertiv. You can see building automation. This is Cisco, Palo Alto Networks, Honeywell. It's just a great chart. And so if you want some ideas and you want to look at stuff and you want to buy the shovels that are being put into this, the picks and shovels into the AI generation, this is just a great chart. I really like that one. Now, we talk about leveraged ETFs. I'm going to put a list of leveraged ETFs today, by the way, into the newsletter so you can see them. SOFI insiders. If you ever want to see insiders, just go over here to Finviz, okay? And you're just going to scroll to the bottom. And it's never a great idea to just buy a stock when a CEO buys it because you just don't know. But this dude's been buying some. And it's a little bit. I mean, listen, he's not. I saw him on CNBC. I'm totally impressed with him. But these are clear buys. The 3rd, the 23rd, the 24th. He's buying at about $6.92. Okay? Chief Technology Officer sold at $6.41. But let's take a look at SOFI in the 4-hour algorithm, because what you can do is you can actually put the insider buys on your chart. I'm not going to do it here, but TrendSpider allows you to do this. And I've said this before. I think at some point in time, this is a $10 stock. The 4-hour algorithm got you in at $6.50. Now, I would argue again, you're seeing some weakness. It's turning over. Now, at some point in time, this gap up to 855 gets filled. I don't know when. Right now, the MACD looks like it's crossing over. You have their earnings coming out on July 29th. Maybe they say that, the 50-day has started to turn. Maybe this 200-day down here at 715 starts to provide some support. It's at 739 right now. So, again, you take a look at all of the information that you have, the insider buys. We're a clear, reason to buy. Again, you can see here, TrendSpider puts the buy in. And they put it on their chart. So keep an eye on SOFI, the CEO buying, probably some good news during that quarter. This is why I own Broadcom, by the way. Just shit can come out and it can pop. NVIDIA is up 2% right now. AVGO is up 2%. The market just opened. I'd like to see where CrowdStrike is. CrowdStrike is at 292. So the market is beating it down. I would probably use the 5-minute to try and see when you have strength in the 5-minute, because once you have strength in that one, I think you load up on it. Again, that's a long-term buy. I don't think that you go all in on one. You dollar cost average your way in today as you see it, as we start to get more stuff. Then, Sentinel-1 is up 8% this morning. That's S. That's another CrowdStrike. Cloudflare up. Palo Alto up. This one's just seeing some weakness. They may see some people leaving. But I got a email from my dad last night. He's a Motley Fool subscriber, and they went over GMed. And this is what they said. That, GMed to me was just a pandemic stock that was traded. Since our first recommendation in May 2020, the business has been performing roughly as expected. The stock has positive returns, but trailing the market. That's where I have a problem with Motley Fool. They're saying that, hey, this is a great stock, you should buy it. I don't know that you should buy it. Let's take a look. This is from March when they recommended it. And you can see the blue line is the S&P. You're up 80%. GMed's up 54%. Now, there's some stocks that are even down less, that made less than 54%. So maybe GMed was a good one. I would argue if we go over here and we look at the quant and we pull up GMed, I would argue it's probably not a great buy. And we can take a look at the quant ratings. It says it's a hold. And the reason I would say it's not a great buy is the valuation. The valuation, and this is how you use the quant to look at it. Look, their PE is 28. That's incredibly expensive. Even with their growth, their PEG is at 2. You want to buy something that's under 2. The sector median is 1.93, so the sector may be good. This is healthcare. This is healthcare equipment. You may want to buy something else. When you look at the growth, they're growing phenomenally. But their earnings per share growth year over year, they're actually losing. So they're doing some write-offs. The revenue is great, but there's some cost issues because the return on earnings growth is down 79% year over year. So let's take a look at something. This is how Seeking Alpha Premium gets you. Brainwaves, Zimway. Let's see a BWA. Let's see how this stock's performing. Because BWA, over 1 year, you are up 171%. So again, I would argue that I think Motley Fool is just not a great service. They have some good stuff, but I would argue Seeking Alpha is far, far better. Netflix, these are the earnings we're going to go over. Netflix beat and raised, still went down. It's up 4% in the market right now, up 4%. This was an opportunity to buy the dip. It's a $700 stock. I will tell you, it's a $700 stock. We can look at the Wall Street analysts. They are probably going to come out with some raises. Essentially, Netflix beat. They said their ad tier is going to do. Their average price target is $670 on Wall Street. That's going to go up. That's just going to go up because look at the price action. Every time it goes up, they just raise their price target. You're going to see a bunch of price target raises. But remember, when they just posted their earnings, it was down. It was down. That's a hard one to deal with. It was down and you didn't know where it was going. Then they came out and they explained it on the call and now you're up. Unless a company, and this is the earnings for next week, and this is going to be my direction, unless a company beats and guides higher, they will get killed. This one, it beat, it guided higher, but there were some ifs in the actual statements. And so once they explained them on the call, boom, we're off. We're off to the race. It's a $700 stock. So take a look at that one. We can look at, let's look at the chart on Netflix because it is a core portfolio stock. It is one that I own personally, and I bought in, I think, at about 400 or 500 between that range. That's $700.99. That's the all-time high. Now, the algorithm got you out here with an 18% gain, and it got you out around 651, 650. So you had the opportunity to buy back in. But, again, in my mind, I don't mind buying back in after earnings. If I had gotten rid of this because the algorithm told me to, I didn't. I'm still holding. But you're going to see a MACD cross up. You're going to see the RSI come off of oversold territory at 35, where it was trading in that range for quite a while since it looks like July 11th. So it was trading, it's coming up to 50. And so you're going to have a buy signal in the algorithm. Do you want to buy now? Well, if you use Netflix and you pay for Netflix, buy Netflix. Other people will too. They got all the Christmas NFL games. If you don't think that the January quarter is going to be an enormous quarter for them with the NFL games, you're out of your mind. Intuitive Surgical, I would have never guessed. This one's up 7% following quarterly beats. They beat, they guided higher. One that didn't beat and didn't guide higher and is getting killed is American Express. Q2 revenue missed. The guidance on sale gain. They guided lower. It's not getting killed from a perspective of, oh my God, it's down 4%. Because when we look at this one's coming off of all-time highs. So it's not like it hit all-time highs and then came down. This one hit and you know, it again, it had that little button hook. Now the algorithm didn't get you out. It will get you out. We'll get you out here. Edward Corona, who's the options oracle, he texted me last night, hey, what do you think of American Express earnings? And I told him, I said, it's a coin flip. I said, earnings are always a coin flip. Is it going up or is it going down? He actually got out of his American Express options play, and he did the right thing. It's down 4%. So he took a 68% gain on that one. He's one of the ones that I follow. If you want his stuff, just reply to me or go look who I follow on Substack. But next week is huge for earnings. Let's look at some earnings hub. Because here's the Netflix earnings. I was looking at that just so you know. We'll close that down, but we'll go next week. And I love Earnings Hub. Earnings Hub is fantastic. I just signed an affiliate agreement with them, but it's free. I don't think I get anything, for signing the affiliate agreement. But we got Verizon before it opens next week. We've got Coke on Tuesday before it opens. Danaher, GE, Comcast, UPS, Lockheed Martin. We got Google, Tesla, Visa, Texas Instruments, Chubb, which Buffett just got into. We got Enphase next week. That's all after on Tuesday. Wednesday beforehand, you have Thermo Fisher. You have AT&T, which is always a fun one to look at. You have Old Dominion Freight, which again is a Buffett thing. You have VRT. This is Vertiv Holdings. That's one that I currently own. You got IBM, ServiceNow. You have Waste Management, Chipotle. First earnings after their first earnings after their split, and I think they've seen some. I think it's testing its 200-day on the chart. You got O'Reilly, and no, I didn't stutter. That was meant to be. Union Pacific on Thursday. Then you have Google and Tesla. I will tell you what I think of Tesla. Okay, we'll go over Tesla a little bit here. Now they were down 11% last time. 45 cents reported. Down 4.65. The estimate this time is 60 cents. Okay, the estimate revenue is 24.19 billion. I don't think they will meet that. I think you will see this stock pull back heavily. I've told you before, I got out of this stock about 250. It was that day that the cyber taxi was robo taxi was delayed. I got out of it for that reason. I am expecting this one to miss. Now, I have been wrong more than I've been right on Tesla. So don't take this as guidance. But I absolutely believe this one will miss and it will be another buying opportunity. But I would wait for it to get under 200. Again, I think they have huge opportunity. And I think they will talk about the opportunity. But the opportunity is further out than 1 year. The opportunity for robo-taxis is not around the corner. I used full self-driving the other day. It's not there. It's not there. So this is one that I, just want to look at. Now, you can, one that I want to show is DR Horton. So DR Horton was up 10% yesterday. It slid 2.2% with the initial reaction. This is yesterday's earnings, so it's not today. You're seeing today it's up 1.72. But this is what, news in this market where you want to find the price. The price drives everything. The price drives everything. You can have all the alerts. You can have all the indicators on your screen. Price drives everything. So we talked about it yesterday with one of those new trader U kind of things where price drives everything. The algorithm had you in here at 136. Sure, it looked weak. Sure, you've got gaps up. But yesterday's earnings, you've got gaps up here. Am I buying at 176? No, I'm staying away from it. I own ITB, which is the home builders ETF, which is up, which is enjoying this. But again, am I buying this? No. Let's talk about social requests. Hunter from Instagram, FLUT. Let's look. I think this is Flutter Entertainment. This is the competitor, and I think larger than DraftKings, to be honest with you. But FLUT. Let's look at this one. So the algorithm has you in at 186. You are clearly playing with this 200-day right here, and you've lost the 200-day. You've got a slight gap down below. The algorithm makes you 114% versus 107% if you bought and held. This is over 25 months. I don't know why it's doing 25 months, but positions 28, over 25 months. So just a little bit over, more than one per day. I'm seeing weakness. So the MACD is crossing down. The RSI is at 50, but you're seeing a lot of volume. Now you're seeing the volume tail off. Maybe they're just getting a little bit tired of this one, but let's look at some of the fundamentals. FLUT, we'll look at this one. We'll look at peers because I do own DraftKings at about $26, I think, is my average purchase price on DraftKings. And I was down, I think, 10, 15% on that one when I first bought it. But here's Flutter. It's a hold in the quant, and the reason is the valuation. Now, when you look at the peg is 0.89. So they're not making money. Once they make money, you're going to see this one probably pop. But their profitability, they're making 47% margin, but their return on equity down 12%. Their return on total assets down 5%. Might be a while for them, but they do have a B-. Let's look at peers because this is, I think it's DraftKings should show up on this one. You got DraftKings and mostly casinos. What you can see is Flutter is down 3% over 1 year. Las Vegas Sands down 31%. DraftKings is up 18%. So where do you want that, to put your money? It might be in DraftKings. DraftKings is just doing better. If we go and look, it's a buy on the quant. It's MGM's the only other buy. When you look at the valuation, it's a D, but their momentum is a B-. Honestly, I don't know enough about the businesses to say, oh my God, one's better over the other. I just own DraftKings. Revenue growth year over year, DraftKings 57%, Flutter 19%. When you look at the revenue growth forward, Flutter's expected 19%, DraftKings expected 38%. Over 5 years, they're expected 74%. Flutter's not even keeping up. So, profitability, gross margin, 47%. So they're making more money. EBITDA margin, DraftKings isn't making money. I just think DraftKings has the opportunity. 1 month performance, you're seeing weakness on DraftKings, but strength on Flutter. So do you want DraftKings to continue up? I think it's just brought down by its valuation. Short interest, DraftKings has 4.81%. Flutter only has 1.8%. When you look at their income statement, DraftKings is making $4 billion. Flutter is making $12 billion. So Flutter's the leader in the group. I don't know which one you want. I'm in DraftKings. I probably should be trading it instead of owning it, honest to God. I'm not a big sports fan kind of better. I used to bet. Now I use Webull. And if you want Webull's better than sports betting. It's down here. It's the fourth link on the link tree. I love it. I put $1,000 in there. It's now $7,000. I used to bet on sports. Now I just bet on stocks. And I make more money by far. Let's see. Michael from Instagram wants me to look at Kava. Funny, I got both Instagram requests today. But Kava. So Kava is high-end kind of fast food. A little bit like Chipotle. A little bit less than Chipotle. So again, you're seeing weakness. Anything that's run here, you're going to see weakness in. Algorithm makes you 47%. It's only been out for 13 months, so a little over a year. If you bought and held, you'd make 89%. Now, you're seeing it test that 200-day. If we go and we look at the weekly, you're probably going to see this one. It's still running. And so you don't even have a 200-day. So you're well above that 50-day. But again, on the 4-hour, it looks a little bit beaten up. But I would argue that 200-day probably has to provide you support at 75 for you to buy. Now, the algorithm might get you back in, but it will get you back in without confirmation. So Kava, from a valuation perspective, I'm not sure it's actually worth it. I think Chipotle might be the better grower. We can go and look. It's a hold in the quant. As far as valuation goes, I don't think Kava's making money. Well, 144 PE. I mean, that's just, oh, God. That, in profitability, they're growing 37%. The sector is growing 36%. It's restaurants, consumer. I think Eat's going to be the number one here. Yeah, Eat. It's this one is an alpha pick. And so I think this one might be, if you wanted to get into something like that, I think that's going to be your better bet. You can see the valuation on Eat. They have a 16 PE. So you're paying far less than you are for Kava. Now, your growth on Eat, it's still good. 4%. The sector's only growing 2%. I just don't think that restaurants are going to make a ton of money. So it's not something that I'm interested in, but if you want to get into it, I think it's good. Now, scans. This is the final thing. Scans on this one, boil. I mean, Boyle has a cross up in the 4-hour algorithm. Am I betting on natural gas? I don't know. I mean, this is a decaying asset. This has been one that has been losing. KOLD is the opposite. So you can see I drew a trend line here. We're trading under that trend line. And that trend line, it almost broke it back here in November, October last year. It almost broke it. It didn't. Are we going to get back to that trend line? That's a long-term trend line. I don't know. I mean, natural gas, you can see. Look at how much volume interest is in this stock. And yet it hasn't moved. This is the natural gas future. KOLD is the opposite. And we'll go and look at this. Is there interest in this one? Maybe. But look at how far. We'll go and look at the weekly on this one. But this is one. It got you in at $39. Okay? June 17th. It's been a month. You've almost doubled your money in a month. Betting against natural gas. Betting against natural gas. Now, we can look at this trend. This trend was down here. Where'd you go? You went sideways after that trend. I argued that this was in a breakout down here at 25 back in 2023. I said we're in a breakout. Breakouts typically happen, then you go chase the 200-day. But it's a decaying asset. Do you want to trade this one on this long-term trend? No, it's a decaying asset. These are things that you trade during the day. And I've got this whole list in TrendSpider. So if you sign up for TrendSpider, you get the list. Now, 2 leveraged ETFs. This is HIBS, which is a short on the S&P 500. Now, again, this is a triple levered ETF. It is a short. I would never buy and hold a triple levered ETF on a Friday. But if you think we're going to continue down in this market, this would be the way to play it. And again, 21.94, not a bad one. The other one is short ARK, SARK. And this is 2 times levered against ARK. Okay? SARK, Innovation Daily. So if you think ARK's going to go down, if you think Cathie Woods is losing money, this is one you could probably just buy and hold. But again, it's leveraged with options. It's not one to buy and hold. Honest to God, just don't. Just don't. But you can trade this. You can trade it in the 5-minute algorithm. You can trade it in the 65-minute algorithm. 65-minute, let's just see how it works in the 65-minute. I mean, it's a downward trending stock, but in the 65-minute algorithm, over 8 months, you make 23%. What do you get if you buy and hold it? You'll lose 18%. So your average win, 2.32%. Got you in here at 26. ARK funds have been going down. This was just July 17th on Wednesday? It got you in. Let's see how much you're up. At 26.92. And then you're up, 10% in 2 days? Not bad. Not bad at all. It's 2 times leverage. My guess is that you'll probably get up here to this 200-day at 11%. But again, you got to learn trading and the 65-minute algorithm. It's just a guide. It's just a guide. So Monday, I should be on. I think my hours, I don't start work until 10 o'clock or so. So I should be on. If I'm not on, then, I'll be doing it from a hotel room if I am on. If you are interested in TrendSpider, the 4-hour algorithm, remember that sale ends very soon at noontime, I believe. So get it before it ends. If the sale ends and you just want the standard, get the standard. Again, the 4-hour algorithm, it not only protects you, finds you entries, it protects you from the downside. You can kind of see. I mean, again, the Qs are up 0.21. We're seeing a lot of movement in this market. And so this one provides you a guide. The algorithm hasn't gotten you back into Qs. You may trade sideways for a couple of days, but the algorithm provides you some protection where you can take emotion out and you can say, that chart doesn't look good. And you know what? Gary's 4-hour algorithm makes me 63% in the Qs over 24 months. I might want to trim the Qs because it just told me to get out. You might be seeing this button hook. You might be seeing the Bollinger Bands cinch up here, and you might see that it's on the bottom side of the 9-day. Well, I'm seeing weakness when that happens. The RSI is coming from 58 down to 40, and it's becoming oversold. And the MACD is heading towards that oscillator. It just doesn't have weakness. And the volume levels are interesting because they're still not, we don't have any volume to support us from 470 down to 460. So that's just, again, that's what TrendSpider tells me. So if you want that kind of thing, then just kind of, buy it and learn from what I do. Okay. Have a great weekend. I will talk to you guys Monday. Say bye. Okay. Patty, I'm waiting to get out to, Delta flight delayed. I think everything's delayed. It's a mess. Do you ever buy, sell pre-market, aftermarket? Yes, Patty. A lot of times I do buy pre-market and aftermarket. I think that's where the price action actually happens. You get more volatility after the price action after hours. But it depends on the stock. And I will say for the larger stocks, you're okay trading after hours. If you're going to trade something like GCT after hours, that's just a market cap stock that's not going to trade very well after hours. The one thing you need to do if you're trading after hours is make sure you do not put in market buys. You have to do limit buys in after hours. You can't do a market buy in after hours because a market buy, you could get a swing. Like these 8 a.m. candles. This is a 9:30 a.m. candle. If you put in a market buy and all of a sudden you buy it, it opened up at 35 and it went down to 20. And that probably happened within 5-10 minutes. So you could market buys are not something you want to do. I know your value on it is close to 1K. I put a stop at 769. SMCI, it's interesting. The valuation makes sense. He was just on Jim Cramer's, and he talked about the unprecedented demand. The problem you're going to have with SMCI is not demand. It's not output. It's not, they're going to continue to grow. It's that their year over year is going to be hard to come by. And so they put a ton of money. They devalued shareholders by issuing more stock and bonds and debt. And so that money was meant to grow. And so if they're not growing at the same rate, that could affect the stock. And so right now, SMCI is a hold in the quant. That doesn't mean a lot to me because it's kind of gone in and out of that hold sector. And you can see it was just here at 876, it was a strong buy. But the hold, the profitability is going to be where you have an issue. That 15% gross profit margin may actually come down. And it's because they grew so fast. And so I don't know that it makes sense to actually take the risk. I'm still holding. I think I just got out of, let me see. I'm going to look at my brokerage statement. By the way, hopefully you bought CrowdStrike under 200 because it's now at 312. Let's see. Let's see. Where is my fidelity? There it is. I just got a bunch of stuff coming up. Let me look at my SMCI because it was July of last year that I was buying, so I think it's my first lot may be available to sell. I'm up 0.57%. Market is up 0.21. All positions, I'll go into SMCI. I think that must be it. Nope. That's not it. It's got to be this one. There we go. My first buy was August 23rd. I'm up 240% on this. So yeah. My thoughts on SMCI is it's just, it's going to be hard. I mean, again, it's going to be hard. Wall Street still has a $1,000 price target on it, 1,035, 28% upside. I think you could see it pop up there, but is Dell taking their business? Dell's a bigger business that can do much more. HPE is a bigger business that can do more. And so we saw Dell kind of fall through. HPE, we can do, let's see, edit symbols. I'm going to get rid of Xiaomi. I'm going to get rid of HPQ. I'm going to get rid of that one. These are the three that I think are kind of in competition for the hardware space is what I would say. Now Dell's up 135%, SMCI. HPE over 1 year is only up 18%. So HPE might have more room to actually grow. Quant Ratings a hold for all of them. Seeking Alpha buy. Wall Street has HPE as a hold. Valuation, you can see SMCI has a little bit of problem in the valuation. Dell has a problem in the valuation, and that's really just the margins, I think, from the profitability standpoint. Here's the total return 1 month. You can see HPE is by far the winner here, short term. Long term, by far, it's, SMCI. Still the best performing S&P stock, up 182% year to date. Dividends don't really matter. Valuation, look at the PE. SMCI is at 33. Now you look at the PEG going forward, PEG non-GAAP going forward, it's the lowest. So again, if they continue their growth, they should be fine. But when you look at the growth, they're up 79% year over year. They've got to continue that growth. So that's going to be the real issue. The 15% gross profit margin versus HPE at 35%. But when you look at the revenue growth, again, it's the revenue growth. So performance, you can see long-term, they've all been good, but money has piled into this. So I would expect if they don't continue to grow, you will see huge selling pressure on SMCI. Is Lilly a buy now? Absolutely. Under 900, yeah. Well, it's up 2.6%. I think it's fine. Algorithm got you out on Lilly right before the big drop here, but it will get you back in. This is just a stock that's continued its ascent. The valuation is crazy, but there's the oral drug that Roche came out with, you're still years away from that getting approved. It's a little extended, sure, but if you want to hold Lilly for a year, I think you're fine. Yeah, Chris, I only do limits, so I don't even know about market like orders and stuff. And WVF, dollar cost average. I mean, the saying by Buffett. I mean, we just took a big leg down. It looks like. Let's see. I'm probably negative now. No, I'm still up. I'm up 0.4. Market, but the NASDAQ's down. I'm outperforming the NASDAQ, which I'm pretty happy about. So, State Farm stuff. I have to. I've got a bunch. Kyle, if you're here, if you're listening. Okay, I gotta go. It's 10 o'clock. I got a lot of crap to do. I will talk to you guys Monday. I'm pretty sure my hours will allow me, but I'll update you either in Facebook, Twitter, whatever. But it looks like CrowdStrike bounced back. Let's see. CrowdStrike. CRWD. It is trading at 309. I still think you'll be able to get it under 300 today, but it doesn't. That gap's going to get filled. And that gap probably from 315 up to 335, you'll fill it. Okay.